Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu. We've got longtime fools Tyler Crowe and Jason Hall giving a 1 to 10 rating to the Home Depot of cars. It's AutoZone, ticker symbol AZO. As always, we'll do a 10-second bull bear. We'll rate AutoZone's business, its management, and its financials. We'll talk valuation, and if there's time, fools, we'll play Armchair CEO, and we will top it. All about 12 minutes or less. So let's get to it. Jason, tell us more about AutoZone.
So it's pretty simple. It's one of America's largest auto parts retailers and distributors, and it has been an exceptional investment for many years. The bull case is pretty straightforward. Keep doing what you've been doing. It's just specifically selling parts to customers faster than you have to pay suppliers, operating your stores and distribution centers in exceptionally efficient ways, buying back shares at an aggressive rate. You do that, and investors should continue earning market-beating returns. The bear case, maybe getting too aggressive with capital spending, trying to acquire a competitor. It's a terrible idea. Or if we just see a deterioration of the auto parts business, things like EV shrinking the total addressable market, for instance, those sorts of things could erode returns for investors over the long term.
All right, Tyler, let's talk about the strength of AutoZone's business, including industry competition. Scale of 1 to 10. 10 is invincible. 1 is hopeless.
So I gave it an 8. And for, thinking about industry-wise, auto parts are kind of an essential purchase that happens in all economic environments. Even during recessions, actually more is spent on spare parts because it helps keep older cars running for longer than expected. And it's not exactly, something that's going to be digitized as, distributor caps and spark plugs. What for the business specifically, they are just spectacular at inventory management. One example of it, Jason hinted at it at the top, is they have a negative cash conversion cycle, which basically means like they pay their vendors after they get their money from, customers, which is not that common in retailing. CapEx is minimal. All it has to do is it doesn't even own most of its stores. It leases them. And the only ding I give it is it's a pretty competitive industry. Like auto parts, it's, kind of hard to stand out outside from their jingle, I guess. And between them and O'Reilly, they both get earwormed in your head.
Yeah. So what Tyler said about the industry is exactly right. My score was 8.5 because I want to acknowledge that despite, the generally good tailwinds and opportunity, and the fact that it is a really competitive industry, look at Genuine Parts. It's the owner of Napa. Stock has trailed the S&P 500 by 150 percentage points over the past decade. Advanced Auto Parts stocks down almost 70% over that period. AutoZone's been a multi-bagger. It's just a better run business. They do a better job of getting the right parts in its stores and distribution centers quickly. Like Tyler said, they turn those parts into cash fast, but they also turn them over really, really fast. They're really good at turning their inventory faster than peers. O'Reilly has been the better stock over the past decade. That's the one peer. But I would not argue that it's been a better business, just also very good.
I'll say what Tyler was too scared to say. Get in the zone, AutoZone, and the GOAT. O'Reilly. Let's go to management.
Never leaves your head.
No, it's beautiful. Tyler, a 10 is Warren Buffett, a 1 is Homer Simpson.
I gave it a 9, and it's just because they focus on the blocking and tackling of the business, nothing spectacular, instead of, pursuing some grand strategy of, going into some other retailing venture. Inventory management with such a high shelf keeping unit kind of industry like auto parts, because not only do you have to have a spark plug, you have to have a spark plug for every car type and every year or model that car has been made. There's not always the same thing. So that's hard. And you just have to look at the hot mess that is Advanced Auto Part. That thing is catnip for activist investors that just keep getting burnt perpetually on that stock because they just don't know how to manage inventory. AutoZone has a return on invested capital over 30% every year for the past 30 years, pandemic included. And its shares are down. Its shares outstanding are down 88% since 1998. So they know what they're doing.
Yeah, they're very good. I give the management team an 8 here, but love the results. But I'm also hyper aware this is not exactly a super tenured management team. Philip Danielle's been with the company for a long time. He's been an executive since 2015. He was just named CEO and a member of the board this year. There's not another named executive at the company that's been in their role prior to 2021. I think it's largely good succession planning. These are mostly internal promotions, but I want to be really careful about not giving this management team too much credit for the success of their predecessors.
Now, you still do have William Rhodes as the executive chair, right, Jason?
Yeah, that's right. No, that's true. That is true.
Right. Now, always unclear exactly how much one does and the other, so that also adds.
Well, no, that's good. For a clarifying point, the executive chair is still a named executive. That's right. If you're chairman, you're not. So executive chairman actually still plays a role in day-to-day management of the business. But again, this is somebody that has stepped back and taken a lesser role. I still think you have to be careful with giving too much credit to the guy that was in the big chair for longer and before you took over.
Right on. Let's talk about financials, Tyler. A 10 is a fortress, a 1 is yikes.
So I give it an 8. I think a lot of people kind of looking at this industry for the first time will ding it because, it's got such little cash relative to its debt position. Oh, that's not good, right? But this is an inventory business. Like, you do need to have like a revolving credit facility to buy your inventory, and you're not going to keep cash around if you can just put it into inventory and turn your inventory. So it makes sense why it's structured the way it is. The cash needs to be put into the inventory to make a profit, and it's done a great job of turning it to profit. So I'm not going to ding it for low cash, high debt.
Yeah, I'm gonna ding it just a little bit, but with a nuance that's. I'm not going to counter what Tyler said because I think he's right, but I'm going to go with a 7.5. There is nobody better at turning inventory into money quickly. Definitely offsets that net debt narrative for me, but I do think that a lot of the success of the business has been on leveraging up as it has expanded, and I do think you have to be mindful of the risk because you still have to pay down that debt at some point. You have to service that debt. So I do think there's a little more risk in the business and its financial profile because they have used really smart financial engineering and their ability to turn inventory quickly. And it's the kind of thing though, if it's great when it works well, leverage is really great when it works well. But if there's any kind of a crack in that armor or a failure to continue executing, it could really, really hinder the business.
Right, Jason. Let's talk valuation. Our quant team rates AutoZone as a cautious on the cautious, moderate, aggressive risk-reward spectrum. How well will AutoZone's stock do over the next 5 years? And how safe is it, keeping in mind a 10 is a sure thing, a 1 is a lottery ticket?
Yeah, I don't expect it to do as exceptionally well as it has done over the past decade plus, just because it's a much more mature business. It's a lot larger and its growth rates are slowing. But I still think higher end of 5 to 10%, probably a good expectation. And I don't have a lot of the same concerns. Tyler's going to raise them, but things like EVs are going to undermine the auto parts business. That's a multi-decade thing that's going to play out. But I do think maybe more modern cars are just more reliable. And we're starting to see maybe some of the impacts across the industry where that could kind of slow some of the opportunity there. This is still the best operator in the industry because the stock's still, I think, reasonably priced. They're so cash generative, trades for like 21 times free cash flow, and that resiliency across the economic cycles. This is not a home builder, like we've talked about on some of the prior shows. So my safety score is an 8 because of all of those factors.
So I have a more optimistic return and a lower safety. I had a 10 to 15% return with a safety of 7.5. Since going public more than 40 years ago, it's generated a 19% annualized return. I'll discount that a little because of total parts for like the EV, for an EV is actually lower than an internal combustion engine. But, those tend to be higher margin because they're very technological products that are going to get higher margins. And AutoZone, O'Reilly, they lean more towards consumables, your brakes, your wipers, wiper fluid, tires. Tires a big thing for EVs because they're considerably heavier and they're going to run through tires way faster than traditional ICE cars are. But, relative to say like a genuine parts or Napa that, they serve auto shops with exhaust manifolds and distributor caps, like all the stuff in the engine parts, those are probably going to be the parts of the auto retailing business that's going to suffer more.
And, Tyler mentioned that 19% annualized return since IPO. That is massive when you get the compounding. The compounding always takes those returns, makes them a lot smaller than like a 1-year return. But that is massive. That's around what Buffett has earned over his decades. That's AutoZone, no matter what we say about it, its past performance is kind of the thing you should look at when you're hyped up on the hot new industry. This is that boring business that can, if done right, can really perform in your portfolio. Let's talk about Armchair CEO really quickly. Jason, if you're running AutoZone, what are you doing?
So I mentioned it earlier, talking about how they've been a smart user of debt to leverage up as they've grown the business. This is a business that won the ZERP race, right? The low interest rate environment, using that debt to grow. Let's win the higher for longer marathon too. And let's start thinking about deleveraging, maybe less about share buybacks, and start reducing that debt load, and really position the company as a more mature grower over time. I think that's the smartest thing we could do right now.
I'd like to think I'm smart enough to know when someone's doing a better job than I can and just stay out of the way. So I don't really have any notes. Maybe I might get on my knees and beg for a dividend. I mean, I know all the buybacks are nice, but a little dividend wouldn't be too bad.
All right, let's see if any company tops it. Jason, you like anything better than AutoZone?
I have nothing to add.
Charlie strikes. I could make the case for O'Reilly, but I think it really comes down to like valuation at the time of the purchase. So like keep both on a watch list, and when one looks trading at an absurdly low valuation, go for one of them, because I don't know if I would choose one over the other in terms of business strength alone.
Yeah, AutoZone's cheaper right now.
Right. Thank you to both Tyler and to Jason. They've given AutoZone a strong overall score of 7.7 out of 10, just short of that 8.0 that would force me to own shares. They love the business and management, as well as AutoZone's track record and capital allocation. It'll definitely be on my watch list, as well as O'Reilly, if it's not there already. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is another company in the auto space. It's CarMax. Till then, full on.
Give me 1 second for the next one. I need to let dogs out of the room.
Yeah, geez, no kidding. Hey guys, we know the answer to the question, who let the dogs out?
I was thinking the same thing, but
I just had to beat you. I just had to beat you.
No, I might have swallowed my tongue, so I'm glad you did it.